Our team coverage of the Trump tariff developments continues now.
For more, we are joined live by financial advisor from Morgan Stanley, George Noceti. Hey, George, got a question for you.
Go right ahead, Vicki.
Have you seen your chiropractor for an adjustment? I mean, the kind of economic whiplash you must be experiencing like the rest of the country.
I'm getting a workout. We're just trying to give our clients confidence. Today was an amazing day, and it really begs the case. Stay fully invested. If you got out yesterday, you baked in a big loss, and then you missed the upside today. NASDAQ was up 12.16%, and that's a record. We haven't had such high of a lift since 2008. So you only have a few good days every year that are that big, and you got to be fully invested to get them.
George, what does this all mean for the average person? I mean, you hear that China is still in the crosshairs, but everyone else is back down to a 10% tariff. So what does that mean if you're trying to plan a purchase or just go about your life?
Well, don't get over exuberant about it because we're still in negotiations. This was a little reprieve, 90-day reprieve so that things could be negotiated and work out, which is what the market actually wanted in the beginning. I mean, we can stand some tariffs. We can stand to make some adjustments about, the 10% across the board tariff that came into effect, several days ago and is continuing now. We can kind of absorb that. The China tariff of 125% says we're not near negotiations. That all has to be worked out. And then we still have tariffs, though, on steel and aluminum, 25%, and autos being imported and parts are still 25%. So all is not well yet, but it's not doomsday. We're getting better. It looks like there's some discussion and talking, and that's what's going to make the market work. So hopefully it'll be a nice day tomorrow because the market will believe there's some forward progress.
George,
and the market first looks forward.
Yeah, well, for those who were doom scrolling last night, they did see some things happen in the bond market, and something changed in President Trump's mind because first he was full steam ahead, and then all of a sudden, no, people are getting yippy. Why'd they get yippy?
We were hitting a tipping point yesterday, and if this continued on, it would cause total disruption here in the United States and the global economy. So something had to be done. So really, if you've watched the volatility of the market, anytime the administration says something that looks like they're going to be negotiating, the market picks up. And then if he pulls back on that, the market pulls down. So what he said today was really important and gave us a breather so that we can kind of talk to people and negotiate and get some equalization out of these tariffs and the inadequacy between all the imports we take in and our exports.
But if you're a small business owner, George, or if you're, someone who's trying to plan, I don't know, their next few months of life, are you still unable to do so with any sort of clarity?
No, the small business owner is on really small margins. Here in the Bay Area, they pay a lot of rent. They got to get a lot of product out, or if they're a restaurant, they get a lot of meals served because a lot of it just goes to their fixed costs. And so anything that impacts their profit margin can really mean whether they're going to stay in business or not. So the small business person is a lot more vulnerable. The big publicly traded companies can issue stock. They can keep their cash flow going. But the small business person in the San Francisco Bay Area can certainly be injured. And they're extremely worried. And they're really the heart of the United States. The middle class and the lower income are bigger numbers, and they're really important. And so they have to feel confident. Right now, they're not confident. But today helped a little bit. Let's see what's going to happen tomorrow and the following weeks to come.
George, just a quick question. I'm going to get in here. Our producer wants me to wrap. But for those of us who like to shop at, say, Walmart, Amazon, dollar stores, where there are a lot of goods coming in from China, are we going to see some sticker shock here immediately?
Most definitely. A lot of those products, the companies you mentioned, those companies have front-loaded. They've ordered a lot of containers early on, expecting that this could happen. It is happening, so probably for the first few weeks or a month, you won't see much, and then you'll start to see the prices creep up. The retailer, the manufacturer will try to absorb some of those costs, but they're going to also pass them on. They don't want the buyer to stop buying, but if it gets more than a 10% tariff, buyers will just stop buying. Things will be too expensive, especially the middle-income person.
All right. Well, I'm going to go enjoy a cup of coffee because you drink it to the last drop. That's going to be,
well,
what,
we
10%?
got a little break today, and coffee is expensive and could get more expensive. You're right.
On that note, George, we're going to let you go.